Ladies and gentlemen, this is not a drill. This is because Carvana is up 40% in a single day. And if I go back to January 1 of 2023, it's up 972%. 972% in a single year, which obviously we need to have some questions answered. What is going on here? Why is it happening? Should you invest in this company? And is it a good long-term investment? We are going to cover it all in this video. I'm actually going to give you a resource for a deeper breakdown on everything you need to know about Carvana. So let's go ahead and get right into it. Carvana is basically a car sales company, but they did so and became famous by doing everything by vending machine. Back in 2021, they were extremely popular, and that's because the stock reached an all-time high of about $338 per share. Okay, that was 2021. Now, the company is down about 80% since then, but we're not talking about the past. Not necessarily. We're talking about the future. Is this a good investment moving forward? And first of all, what happened today? Like, what happened today? They reduced their debt, or reached a deal rather, to reduce their debt by more than 80% between 2025 and 2027. This is because Carvana had been riddled with debt because they were trying to grow so aggressively back in 2020 and back in 2021. And then things started to fall apart. People were trying to buy cars, interest rates were extremely low, and they were doing everything they could to buy as many cars as possible and sell them. But as the world started opening up, people started producing cars, really car companies started producing cars, and people said, look, I may not need that car as much as I need to. They had to start selling these cars at a loss. That is when they had issues taking on debt and paying off that debt, and one of the reasons why the stock fell 81% over the last 2 years. However, if you're looking at December of last year, the stock was about $5. It is worth 10 times more right now, where it's worth near $55. And it's generally a good thing when you start to see a company pay off 80% of its debt. So the question really comes to, is this a long-term investment? Is this something that you can trust and rely on? Or is this a gamble for you? Is this something that you're just going to quickly invest in and hope that you get in and get out at the right time? Now, I can't tell you which one you should do, but I can tell you what my experience tells me to do in this situation. And here's what it comes down to. What does Carvana do? Okay, they buy and sell cars. Basically what they do. Are they good at doing that one simple thing? That answer is no, and we know this because when they put out their earnings report, we know that sales are down 35% from the most recent year, and they're pretty much consistently down for as long as we've known about the company mostly, and they really have not had a whole bunch of profitable years, which means that they're not all that great at doing what they're supposed to be doing and creating an environment for selling cars and giving the stock room to actually grow in the way that it should. So these are the things that you absolutely want to be concerned about. And as I'm checking my notes, there's another thing you should know as well. So remember, it was $5 a share. It is $55 a share now. Obviously, right now, today, it has tremendous momentum. Obviously, we wish we could have gone back and bought the company at $5. But just because a company says, look, we're going to cut down our debt by 80%, that doesn't mean that it's going to be profitable, or that they're selling more, or that they are still in a good position to grow. Think of it like this. Let's say you are $1 million in debt, okay? You don't have a way to pay it off, but you're $1 million in debt. Somebody comes by and says, hey, I'm going to reduce your debt, and now you're only in $200,000 worth of debt. You are still $200,000 worth of debt. And if you still didn't have a way to pay it off, you're still in a much different situation, right? It improved, but that doesn't mean that you're still going to pay it off, and bankruptcy is bankruptcy at the end of the day. Now, I'm not saying that Carvana is necessarily going bankrupt, but I am saying they're not great at selling cars and haven't done so well in several years. And that is going to be the true test on whether or not this is going to be a good, sustainable business. Because 9 times out of 10, good, sustainable businesses create good, sustainable stocks and long-term investments for us to invest in. So the real question for you is this a stock, or rather this? Do you want to invest in a stock that you don't have to worry about, that you know is sustainable, that you don't have to wake up every day and check your account and make sure it's still there? Is that what you want to do? I would say take Nvidia, right? When Nvidia was down last year, you never saw me complain about it. I kept on holding, kept on buying, and minding my business, and now it paid off. Okay, do you want to do that, and do you see Carvana in that category? That's up for debate. But do you see Carvana in that category? Or do you see it in the category of, I need to go ahead and try to get my money now, so I'm investing what I can, and hopefully tomorrow I can get out. And if I don't look at my account at the right time, if I miss this by a day, I'm going to lose a lot of money. That's the question you have to ask yourself. And you have to decide which side of the fence you're going to be on. And most importantly, what does the company do and what are their prospects, and how has the company actually changed at the end of the day? Yeah, they cut down their debt and that's great for them, but does this mean they're going to sell more cars? Does this mean that the company is going to grow? Are they going to open more locations because of this? That's what we need to figure out. And I'm not sure if this answers the question, but if you want to learn more about Carvana and what you need to know, and whether I was right or wrong back in December, then you want to make sure that you check out this video right here.